Hello dear students, I am Dr. Narendra Kumar, PGT Commerce, and today we are going to discuss about Introduction to Accounting. The learning objectives of today's session are: number 1, meaning of accounting; number 2, objectives of accounting; and number 3, internal and external users of accounting information. So dear students, do you know about the business organization, the entity that purchases the goods or manufacture the goods and sells it is known as business organization. But do you know how they record their lots of transaction? How do they classify it? How do they summarize it? How do they communicate it to their users? For this purpose, they use accounting. So our topic for today is accounting. In general, we can say that accounting is an art of identifying, measuring, recording, classifying and summarizing financial transactions in the terms of money so that the results can be interpreted. Okay, now to understand the meaning of accounting, first of all, we have to understand some important things, or we can say some keywords, and these are identifying, identification. We can say it means determining what transaction to record and what not to record. In accounting, we record only those transactions which a businessman does for earning profit to make money, and these transactions are called financial transactions. So first of all, we have to identify whether the given transaction is a financial transaction or not. Measuring or measurement, it means quantification of business transaction into financial terms by using monetary terms or monetary unit. For example, rupees and paise as a measuring unit. Recording, it means to record transaction. Once the economic events are identified and measured in financial terms, these are recorded in books of accounts in monetary terms and in a chronological order, or we can say we have to record all transaction date wise. Next is classifying or classification. It means classify all the items in different categories like assets, liabilities, expenses, revenues and capital, etc. Next is summarizing. It means we have to make an annual summary for all our transactions to know the income position and financial position of the entity. Next is interpretation or analysis of result. Every businessman, every manager has their goal to earn a sufficient amount of profit, and when they find that profit is less than their expectation, or profit may be more than their expectation, then they try to find out the reason. This is called interpretation of result. Next is communication. The economic events are identified, measured and recorded in order that the required information is generated and communicated in a certain form to management and other internal and external users. Now we will discuss the definition of accounting given by the American Institute of Certified Public Accountant and its board. First definition: in 1941, the American Institute of Certified Public Accountant had defined accounting as an art of recording, classifying and summarizing in a significant manner and in terms of money, transaction and events which are in part at least of financial character and interpreting the results thereof. Next definition comes in 1970. The Accounting Principle Board of AICPA also emphasized that accounting can be defined as the process of identifying, measuring, recording and communicating the required information relating to the economic events of an organization to the interested users of such information. So, these definitions are also saying the same meaning as we have discussed in the general meaning of accounting. Now we will discuss the accounting process in detail so that we can grasp the meaning of accounting and its process. First of all, we have to identify or determine the financial transaction. Then we have to record it in 8 different books. First is cash book. All the cash transaction including cash purchase, cash sale, expenses paid, revenue received in cash will be recorded in the cash book. Number 2 is purchase book. In purchase book, goods purchased on credit for business will only be recorded. Next is sales book. In sales book, goods sold on credit will only be recorded. Next is number 4, purchase return book. If goods returned to the creditor which were purchased on credit, it will be only recorded in the purchase return book. Next is sales return book. If goods returned from the debtor or customer which were sold on credit, it will only be recorded in the sales return book. Next is bills receivable book. If you as a businessman draw some bills and your debtor accept it, then you have to record that bill receivable in the bill receivable book. Next is bills payable book. If you accept the bills of your creditor, then you have to record it in the bills payable book. And the last book is proper journal. All the transaction in the chronological order will also be recorded in the journal which is called proper journal. Now, after recording, we have to do some classification like assets, liabilities, expenses, revenue and capital, etc. Then we have to summarize it in the form of trading account and profit and loss account. To know the income position of the business for the financial year and balance sheet, to know the financial position of the business at the end of the financial year, then we have to analyze or interpret the result. After that, results will be communicated to different users of accounting. This process will keep on going every year and it is called the accounting process. Now we will discuss the objectives of accounting. Objectives of accounting are maintenance of records of business transaction. The first objective of accounting is to maintain the proper record of business transaction in the specified formats and particular books. Next is calculation of profit and loss. Every users want to know about the profit or loss of the business. So, the next objective of business is to calculate how much profit is earned by the entity or loss suffered by the entity, and with the help of trading and profit and loss account, accounting can achieve this objective. Next objective is depiction of financial position. So, to fulfill the legal requirement, every businessman has to show their financial position and publish it. So, it is the objective of accounting to depict or show the financial position of the business, and with the help of balance sheet, accounting can achieve this goal very easily or this objective very easily. Next is providing accounting information to its users. Every users want to know about the income position of the business and the financial position of the business. So, it must be the objective of the accounting to provide all the accounting information to its users. Now, we will discuss the users of accounting. Users of accounting can be categorized in two parts. First is internal user and the second one is external users. Internal users are the employees of the business entity and it's include chief executive, financial officer, vice president, business unit managers, plant managers, store managers, line supervisors, etc. Now, external users. External users are group outside the business entity who uses the information to make decision about the business entity and it's include present and potential investor like shareholder, creditors like banks and other financial institutions, debenture holders and other lenders, tax authorities, regulatory agencies like Department of Company Affairs, Registrar of Companies, Securities Exchange Board of India, labor unions, trade association, stock exchange and customers, etc. Now it's time to have a quick recap. Accounting. Accounting is an art of recording, classifying and summarizing financial transaction in the terms of money so that the result can be interpreted. Objectives of accounting: maintenance of records of business transaction, calculation of profit and loss, depiction of financial position, providing accounting information to its users. And the last one is users of accounting: internal users, which are the employees of the organization, and the external users, which uses the information of the company but they do not belong to the organization. Now it's time to note down your assignment related to today's session. Complete the following sentences with appropriate word. Number 1 is internal users are the dash of the business entity. Number 2, dash users are groups outside the business entity who use the information to make decision about the business entity. Next is accounting measures the business transaction in terms of dash units. And number 4, identified and measured economic events should be recorded in dash order. So now that's enough for today. I hope you have enjoyed this session. Thank you very much and keep learning.